What makes a country the largest economy in the world? Today, we look at the United States and China using clear, data-driven analysis. GDP, or Gross Domestic Product, measures the total value of goods and services produced in a country each year. When we compare countries in US dollars, we use nominal GDP, the standard used by financial markets and global institutions. By nominal GDP, the United States remains number one with around $28 trillion in economic output. China follows in second place with around $17 to $18 trillion in annual output. One major reason for the U.S. lead is the strength of the American consumer. Nearly two-thirds of U.S. GDP comes from household spending. This steady level of consumption supports businesses, innovation, and long-term economic growth. Another key factor is innovation. The United States invests heavily in research and development at about 3.4% of GDP. American universities, startups, and technology companies turn research into real-world breakthroughs in AI, biotech, software, and aerospace. The U.S. also has the deepest capital markets in the world. Nearly half of all global equity value is traded on American exchanges. This gives U.S. companies access to more capital at lower costs, allowing them to scale and expand worldwide. The global role of the U.S. dollar is another advantage. About 58% of foreign exchange reserves are held in dollars. The dollar anchors global trade, commodities, and international finance, reinforcing U.S. influence. China, however, has risen rapidly over the past 40 years, becoming the world's largest exporter and a key manufacturing hub. China produces more than 30% of global manufacturing output, driven by large-scale investment and industrialization. China also ranks number one in purchasing power parity GDP, which adjusts for domestic prices to show how much goods and services actually cost inside each country. In simple terms, PPP measures a country's economic size after accounting for differences in the cost of living, which makes large, lower-cost economies like China appear bigger in PPP than in nominal GDP. But PPP is not used for global market value comparisons. Nominal GDP is. Could China overtake the United States in nominal GDP? It is possible, but the path has become more uncertain. China faces slower population growth, rising debt levels, and pressure in its real estate sector. Meanwhile, the United States maintains steady growth supported by innovation, consumer demand, and strong financial systems. China will remain a major global force, but the United States still holds structural advantages that keep it at the top. This is StockFYI. Subscribe for more clear, objective insights on global markets and the world economy.